Alright, Focus Trades members, this is part 1 of our new day trade series, and the setup that we're going to discuss today, guys, I call the opening level day trade setup. Now, when you're looking for day trade opportunities, guys, because we're working, from intraday time frames, we're trying to capture, a piece of a move that's taking place in one session. With that being said, we need to kind of base these trades around certain key levels on the charts to not only help us, pre-planned trades, but also allow us to take very low risk, high reward entries. So something that I've been doing as of late, guys, is putting a lot of focus on what I call the opening level. And we're going to look at the Qs over here. This is this most recent Friday. And the opening level, guys, is essentially, the price that the stock or the index, whatever you're looking at, opened at. And that's the whole basis of this, guys, is that we're focusing on the opening level. So I'm looking at this day right here. This is a 5-minute chart on the Qs, guys, and this is this most recent Friday. So this is all of our bars from Friday, and as you're going to see, we gapped higher on Friday, and that's where we opened up, guys. So we gapped up higher on Friday, and the Qs opened at 172.01, which you can see right there on a little open tab. So 172 is the key level, and that's the opening level for the Qs on Friday, guys. And now we're going to walk through a few different ways how you can use this opening level to create trade opportunities. Now, here's why I really love this approach, guys, even though I've been focusing on it, for just about a month behind the scenes. As you guys know, I like all of my trades, a majority of my trades, to be pre-planned. I like having a game plan, or as Mike from SMB Capital would say, I like to have a playbook. My personal playbook of setups that I have confidence in, that I know work, that I can use, day after day to not only, take trades, but also put that playbook together way before the market even opens, guys, as well as throughout the rest of the afternoon. So with this opening range, opening level setup, guys, there's a few different things we can do. We can use the opening level as a level of support in the case of going long. We can also use that as a level of resistance if you're looking to go short, and we can also use the opening level, guys, to spot reversal opportunities. And the one thing I want to say, guys, is that just like my swing trades, just like my momentum day trades, do not have blinders on. These opening level day trades, guys, I'm still under that same I want to have that big picture. So a good example is, we're going to look at a few trades here on the Qs from Friday. I'm never going to look at nothing but the Qs, guys. When I'm sitting there looking for trades on the Qs, I'm also going to look at the S&P 500. I'm also going to look at something like a Netflix. Netflix is a big name tech stock. I got these three together here, guys. Now I've kind of got a good feel for what's going on in the market, or at least the market I'm looking to trade across the board. Because again, we want to have trades with the most edge possible, guys. And having, the wind at our back, having, an across the board support for our trade is huge. And a lot of traders, they ignore that. They just stare at, whatever given chart they like for whatever given stock they like. And they're not taking into account all of the things that they need to, guys. So keep that in mind. Still take that big picture view. If you're looking, for opening level plays on something like a tech stock, check out the Qs, check out XLK and the SPY, as well as, those other names, guys. The best trade opportunity in the Qs on Friday was, the last 15 minutes of the day. And if you took this look across the board, guys, during that time span on Friday, you would have seen weakness all across the board. So, we're going to touch into that trade in a little bit, guys, but now we're going to jump in. I'm going to walk through some of my personal trades from last week, as well as a few setups here on the Qs. And hopefully by the end of this video, guys, this is something you can watch tonight, take your notes, and possibly, begin to implement this going forward next week. So with that being said, guys, we're going to jump in right now, and we're going to break down, some opening levels here on the Qs from last Friday. All right, guys, so first we're going to talk about long opportunities using the opening level. Now, you guys can take this approach and kind of, twist it and put it together any way you like. Here's how I've been looking at it, guys. So for longs, using the opening level, I've been looking for two kinds of trades, guys. The first one being, that open level bounce off of support, and the second one being, an open level breakout. This week alone, guys, in about maybe 15 minutes of actual trading, I had two trades in Goldman Sachs using this second, long trade of that opening level breakout. So again, guys, these were trades that I had in my mind, when my head hit the pillow the evening before. And just having this playbook, having, this thought in mind, having these setups ready allowed me to capitalize last week on Goldman Sachs twice. And I made about, $1,500-$1,600 alone from that trade, guys, on Goldman Sachs alone. So that's the second kind. But we're going to talk about the first one right here, guys, which is the open level support bounce. Again, the entire basis of these trades, guys, is using the opening price of the stock or the index you're watching to put together all your trades. So we're talking right here, guys, looking at last Friday. So everything to the right of this, bar breaking up the screen here, this was last Friday. As of this recording, guys, it's the 1st of July. It's a Sunday, so this is a few days ago. And as you can see, the whole market, the Qs and the rest of the market, we gapped up higher on Friday morning, and we opened up right here, guys, at 172.01. So we're going to call it 172. So there we go, guys. This green line, which is the opening price, 172 for the Qs, that's the magic line all day. That's our opening level, and in terms of these day trade opportunities, guys, this is what we're looking for. Everything is based upon that level. So the first, potential long setup, guys, is that open level support bounce. The market opens, you immediately go put your line in your chart, mark your open, guys, and now, in past videos, we've talked about this. We've talked about support and resistance trades and how they can be great, super low risk, high reward opportunities, guys. One thing I want to mention before we kind of jump into these trades is that though we can use the opening level, to find some very powerful, nice, half hour to hour long swings, it can also be useful, guys, for taking your piece of a quick scalp, maybe riding 1 to 2, maybe 3 5-minute bars, and then getting the hell out. So again, take this, guys, incorporate it into your own trading how you wish. Me at this point, with the opening level trades, there's different opportunities, and I position size accordingly for both. On a support bounce like this, guys, I'm simply looking for a 1, 2, 3 bar bounce off of support where I'm looking to get a nice little quick profit. With options, guys, a quick bounce, you're talking 10-20% profit. Now that may not sound big, but on a $5,000 position like I'm taking right about now, that's $1,000 in 5, 10, 15 minutes, guys. So regardless of where you are now, understand that these very small moves, these very simple things to identify, you're going to reach a point in your trading and in your capital, guys, where these little pissy moves are $500, $1,000 in 5, 10 minutes. So don't overlook, the power of these gains, guys. So open level support bounce, guys. This is a great example. The Qs opened up, gapped higher on Friday, guys, and that's our line right there. That's our opening price. Because they continued to move forward right after the open, guys, we didn't have a chance early on for that open level breakout. We didn't gap higher and then fall below the open, where we would then wait for a return and a breakout. Rather, the Qs started off with some strength, guys, and they kind of continued all afternoon. However, right around lunchtime, if you're sitting here, you're observing, guys, and you have alerts, set at that opening level, if the market continues to look strong, guys, if you still have a long bias, this opening level can be a great place to initiate some positions at that support for that quick bounce, guys. So ideally on Friday, and let me just say first, some of these trades I took, some of them I didn't, but it's still good for me personally to run through these with you guys so I can execute even better next week. You're sitting here, guys, you're monitoring a few things. Of course, you want to be looking at the Qs and the big name stocks. And you know what, guys, when this pullback starts and the Qs begins to approach the opening level, your mouth should kind of start to water. Let's take an across the board look here. Let's look at the SPY the other day. It was pulling back, guys, during Friday, but right around lunchtime, things were looking good. So, we're sitting here The Qs are pulling back, guys. It's mid-afternoon. They're pulling back to that opening level. And we're looking across the board just to make sure, the entire market isn't, falling over on its ass. We just want to, make a confirmation that this is a little intraday pullback rather than the market rolling over, which we got later that day. So, taking a look at the Qs here, guys. Things were fine, very low volume, not what I would consider kind of a breakdown. And we put my SPY chart. And let's take a look at the SPY and see if we had the same thing. Was it a huge, rush of selling volume breaking down, or was it more so just kind of a, a pullback intraday? And right around noon on Friday, guys, you're gonna see everything was fine, little pullback, and that bounce came in. So across the board, guys, it wasn't looking like, a huge sell-off. Yes, we were making a little pullback, but it was lunchtime. That kind of thing is normal. And everything across the board looked okay. It didn't look like the market was about to roll over or collapse. So after taking that observation, guys, after getting that little personal confirmation that we aren't really rolling over here, we don't look super weak, we're kind of just fading, we should be sitting here, guys, with our mouths watering, waiting for the Qs to come down here to this level. Because as you guys have seen in the other support and resistance videos, we can take super low risk, great reward entries, guys, on these levels of support. And again, I'm finding that the opening level, the opening price, is a huge, level of support or resistance for these day trades. So you can be monitoring this, guys, and sitting here, and you know what? As the Qs are fading here, and they're literally sitting right here at that opening price, that is where you can go long. That's where we can buy some calls. And here's what happens, guys. The Qs are fading down here, but they're bouncing. They're sitting right here at the lows of today's open. You should be sitting there with your trigger finger ready, and as close as you can, guys, to that opening price, as close as you can. That's when you ideally want to go long. You want to buy some calls, you want to go long some stock. And again, what are we looking for? We're looking for this opening level to act as a level of support and for buyers to come in. And that is exactly what happened right here, guys. You had about an hour to make the observation that the market was kind of fading. However, again, we took that big picture view and we weren't collapsing, guys. There was just a little dip going on. You should be sitting here drooling, waiting for the Qs, guys, to hit that opening level of support to go long and buy some calls. Now, here's why this is super low risk. Let's say this trade didn't work, guys. Just like, about an hour or so later at 1 o'clock. It worked once, it worked twice, but let's just say that this is the only time, the Qs came to support, guys, and it's sitting right there at that opening price, and we buy some calls or we go long right there. Here's why this is super low risk, guys. We're taking this trade under the assumption that this opening level is going to act as support and buyers are going to come in immediately. You see how this dipped decently below that opening price, guys? I want you to completely ignore the fact that it actually turned out to continue to go in your direction. We go long right here at support. It dips below that level of support, guys. I'm fucking out. Close the position, take a very, very small paper cut, and move on. Because as I want you to guys see next is that when that level of support breaks, guys, like it did at the end of the day for the Qs, it can get pretty ugly. However, if you had that discipline, guys, you could have tried going long right here at support, and look, it broke, it fell below support. You could have been out right here where the dumb money is holding on. So super low risk, guys. We take an entry looking to go long at the level of support. If it falls below that level, exit, get the hell out, take a small paper cut. Literally, guys, on positions where I'm putting $4,000 to work, I've been able to take $100 losses. Super small paper cuts on good position sizing by having that discipline. But when it does work, guys, and you get a few bars in your direction, how easy is that? We identified from the minute the market opened the level, the opening level for the Qs, and then it's just simply monitoring, guys. By the time you see this taking place, you should be ready. This is a super slow pitch. This is like an underhand lob, guys, coming across the field. We had a half hour to crank up and get ready to execute. So when these work, guys, you know, it's very small losses when they don't, but when they do work, they are such nice little bounces, guys, that they really do make a difference. And I'm going to pull up the options chain right now, and we're just going to take a look at what the actual percentage return would have been right here had you bought some at the money calls on the Qs. All right, guys, so had I taken this trade right here off of support right at 172, so you're talking, you know, you're going to buy the at the monies most likely. So we're buying, you know, the 172 calls right here, guys. So we are looking at 629 right around noon. So let me see if I can come in here, guys, and let's see if we can find 629, 12 o'clock. All right, guys, and there we are. So that would have been the entry right there. Okay, so we're talking right there, guys. So that is when you would have bought the calls. So we're getting in right here, guys. And again, you can take these trades how you want, fellas and girls. For me, you know, on the opening level breakouts, I'm looking for bigger returns. On these open level support bounces, give me 2 to 3 bars in my direction, guys, and I'm very happy. And here's why. So just, you know, theoretically, let's just say that we went long the 172 calls right here, and we rode, you know, 3 bars, guys. You know, so we're in here and we're out somewhere in here. Doesn't look too big, you know, doesn't look like a home run trade, but on those 3 bars, guys, you know, those 172 calls, those at the money calls for the Qs, on that little move, those suckers went from, you know, we'll call it 165 to 185. Now listen, guys, you're not going to catch the entire move. You're not going to catch the bottom, the top, but, you know, $1.65 to $1.85, that's a 12% return, guys. It's a 12% return on a very low risk trade in a few minutes. Now, maybe, you know, that kind of return doesn't excite you right now, but it should. Don't think about where your capital is now, guys. Think about going forward. You know, for me, you know, I'm conditioning my mind that, you know, I'm gonna be taking $10,000 left and right on all these trades, guys. 2-3 bars, 12% return. You know, now you're talking $1,200. And hey, if you're putting on $1,000 position sizes, guy, $100, $120 in a few minutes. And fuck it, if you're putting on $100 size, 10, 12, $15 in a few minutes, guys. You can't overlook this. And the big thing here is that identifiable, you know, plannable, easily executed, guys. Low risk, high reward. If you execute, you know, you're out of here immediately, just like you would have been here. And you're talking 10% plus returns, guys. Those things add up. They truly do. So that's the opening level support bounce. Looking to go long, guys. That's one way that we can go long using this opening level, is that opening level support bounce. So this week, add this to your watch list, guys. Track your favorite stocks, track the indexes, and take note of where they open. And if they continue to have a strong start and continue to trade higher throughout the day, if they make that pullback, guys, watch that level. Watch that level of support for those very low risk, nice reward entries, looking for that bounce. It's no different than our typical, you know, bounce off of daily support or whatever level of support, guys, but we're using a really key intraday level in the open. So that's, you know, setup number one, guys, with the opening levels. You can go long and look for long opportunities off of bounces of support. And the support, you know, with these trades, guys, again, is that opening price. So now let's take a look at a few examples of, you know, the second ideal way to go long using the opening level setup, which is the open level breakout. All right, guys, now for the second long opportunity, let's talk about the opening level breakout. Now, you know, the last one I just showed you guys, that opening level support trade, those, you know, the kind of trades where I'm kind of looking for more so a scalp, quick opportunity where, these trades, guys, the opening level breakout, they can tend to be, from my observation, a bit more powerful. You can typically get, 3 to 5 bars in your direction, and sometimes even more, but same premise, guys, still based upon that opening level. So these are two of my personal trades from this past week in Goldman Sachs. So on Wednesday and on Thursday of last week, I took the same exact trade in the same exact stock right from the same exact setup, guys, and it brought home about $1,400 of profit. So this is the second way we can go long, guys, and we'll call that the opening level. All right, so this is the opening level breakout, guys. I'm gonna put that down there. Opening level breakout. So we're looking at this day right here, guys, to the right of this, this line breaking apart the screen, and this is where we opened on the 27th. So the 27th was last Thursday. Right there, guys. I'm sorry. Well, where am I? Okay. Last Wednesday. The 27th was last Wednesday. So Goldman, guys, which is, a stock in the sector that I've been paying a lot of attention to lately, we opened up on the 27th at 221.48. So that was the opening price. So this is the opening level breakout, guys. As you can see, these are 5-minute candles right here. We opened right here on this bar, guys, at 221.48. And immediately we began to fade from the open. So unlike the Qs, which we checked last week, guys, which we just checked, previously, those opened up and continued to trade higher. Here in Goldman, guys, in these two trades, we open up right here, 221.48, and then the stock begins to immediately fade. It fades for the first 5-minute bar, opens up right here, fades again on that second 5-minute bar, and then the volume returned, guys. So we open up, we faded, we continued to fade a little bit lower, but then as you can see by that volume right there, and again, the volume is always so key and so telling, the buyers came back in and they pushed Goldman back up, and it actually recrossed that 221.48, guys. So this is really simple. The stock opens here. The stock then dips, guys, and then the buyers come in and they drive that stock back to the open and then through that opening range. And nice swing moves, guys, intraday can start after we've retested and rebroke that opening price. So because I knew this was a stock I wanted to trade, because I knew, guys, I was observing it, we opened up and fell lower. As soon as Goldman began to fade and fall from the open, I had my trigger ready. I was ready to buy calls as we crossed right here, guys, and broke above that opening price on the second bar on some strong volume. So as we did that, guys, I went long, I bought some calls, I got my quick piece from this move. I took my piece of that move, didn't catch the whole thing, was not trying to catch the whole thing. And for what it's worth, guys, later in the afternoon, Goldman actually came right back to the levels where I went long. It came right back to the open. So we just looked at some support examples in the Qs, guys. Here's another one, bouncing off of that opening range. So I identified Goldman, guys, at the open, fell below its opening price, and then the buyers quickly returned, pushed her back up, and she broke over right here, that opening price. That's when I went long. I rode those few bars, rode that volume wave, took my piece, and that's that, guys. And the return on this trade, let me just pull up my options right now. So it was a 30% return, guys. I bought here at, let me see. Bought right in here, guys, at 9:35 in the morning, sold at 9:40, somewhere around this level, and that was a $950 profit in 7 minutes for a 29% return. So nice and simple entry, guys, but again, this is a very key level that we should be monitoring. Where the stock opens, draw your line in that chart, and as you can see, that becomes a pretty big, pivot point for the day. The very next day, guys, I took the same exact trade in Goldman on the same setup. So here on the 28th in Goldman, we opened up at 220.25. So let me move that line down. 220, 25. And the same principle here, guys. We opened up right here, 220.25, and immediately Goldman began to fade. It spent the first bar of its morning, guys, pulling back, fading below the opening price. But as you can see, those buyers returned. They pushed Goldman back up, and they pushed her right through that opening level. That's where I went long, guys. Took my calls, and it turned out to be another profitable trade. So I'm looking at my trade results right now, and I confused the two. So it was this trade right here, guys, on last Thursday. So this trade was on the, this trade was on the 28th, and this was the $950 profit trade, guys. So went long here at 9:33 in the morning, so very early in the session, but again, we opened up higher, we dipped, and then those buyers came plowing back in and pushed it right through its opening price. That's when I went long, guys. 9:33 in the morning. I sold here on that next bar, and this is a 7-minute trade. I was able to return 30% in those 7 minutes for a $950 profit. And I'm glad I took my profit, guys, because it actually faded and came back below my entry point. But there we go. Quick $950 profit. And then the previous one, guys, over here, that was actually a $400 profit in 5 minutes. We went long at 9:39, right as we crossed the open, and sold about 4 minutes later in this range for a nice return. So very simple, very basic stuff, guys. But as you can see, it can be powerful. It can be very powerful. We'll go back to this one right here. Let me see. We got our open at 221.48. It doesn't take much work, guys, to pinpoint, on the charts, these key levels, and that really, these are two simple plays that we can use, guys, to create trade opportunities. The first one being this breakout play. We identify our opening level and we fade lower after the open. We fall below the opening price, and then the buyers come back in to push us higher. We break above our opening price. That's where you want to go long. So that was a quick $400, guys. And then the same trade over here, Goldman opened, it immediately began to go lower, took that position, and there you go, guys. So that's the first kind. And as we talked about on the Qs, you got that support play. You got that nice, easy to identify bounce off of support.